To me, there's a whole area of the market that gets sort of lit up when the Fed gives sort of that all dovish signal, or Fed is resuming its cutting cycle, and I think that's things that benefit from liquidity. So that's financials, small caps, and also, believe it or not, Bitcoin. I think investors were thinking this is the dog days of August, and that we'd be getting some hawkish inflation data. So I think some of that's just the relief that, in fact, CPI was better than expected. I think it's also just follow through because we've had a pretty decent earnings season, and at the end of the day, the economy is holding up pretty well. And I'd say that it has a lot to do with the fact that August will probably be a surprise and markets are going to be stronger. I think Ethereum and small caps tend to be correlated. So to me, 7,500 actually might even be on the low end of what's possible.
Really?
I think I've seen many targets of 10 to 15,000.
In a market that just ripped off the band-aid of a better-than-feared inflation report, Fundstrat's Tom Lee is declaring that his word of the day is breakaway. He argues that the market is on the cusp of a major upward move, and the primary signal is coming directly from the crypto space. Citing Bitcoin's price action as a reliable one-month leading indicator for the S&P 500, he believes its recent surge is forecasting an imminent rally in all-risk assets. This macro setup, fueled by the anticipation of Fed rate cuts, creates a perfect storm for liquidity-driven assets, a category where he prominently includes financials, small caps, and, most importantly, Bitcoin and the broader digital asset ecosystem.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
Well, I think it's just a reflection of the fact that the market was bracing for a hot CPI, knowing that not only was the Fed, but economists were warning that we'd start to see inflation coming through in the July CPI report. So I think it was actually elevated compared to where it was in June, but I think it was much better than expected. So it's one of those rip off the Band-Aid moments.
All right. We were showing the CME Fed Watch tool earlier, just under a 95% chance of a cut coming up in September, being priced in by bond traders. That rate cut, what area of the market does it benefit? Does it definitely just benefit the cyclical sectors? What does it mean for the tech trade, et cetera?
To me, there's a whole area of the market that gets sort of lit up when the Fed gives sort of that all dovish signal, or Fed is resuming its cutting cycle, and I think that's things that benefit from liquidity. So that's financials, small caps, and also, believe it or not, Bitcoin.
Oh, Bitcoin. All right, that's interesting. By the way, potential rate cut. We've often thought we're going to get those rate cuts, and they don't actually happen, even though they're being heavily priced in right now. With that,
that's right.
I want to get to your word of the day. What's your word of the day today, Tom, and why?
The word of the day to me is breakaway. And the reason I'm saying that word is that in early July, Bitcoin made a breakaway move, and I think Bitcoin has been leading the markets by a month. So believe it or not, I think that this is the month that the S&P, makes new highs towards 6,500, 6,600.
Interesting. So you think we hit new highs this month? What's the catalyst? Because, we're pretty much through earnings season. So what pushes us higher other than a lot of optimism over a rate cut coming up?
Frank, I think part of it is positioning and sentiment, because I think investors were thinking this is the dog days of August, and that we'd be getting some hawkish inflation data. So I think some of that's just the relief that, in fact, CPI was better than expected. I think it's also just follow through because we've had a pretty decent earnings season, and at the end of the day, the economy is holding up pretty well. And I'd say that it has a lot to do with the fact that August will probably be a surprise and markets are going to be stronger.
All right. Tom, you didn't send us a pick, but I'm going to guess that BitMiner might be your pick today. It's a company that you're involved with. I want to talk to you about Ethereum and also BitMiner.
Yes. Well, Ethereum, has probably become the surprising sort of hit for cryptocurrencies this year, because it's up 28%, outperforming Bitcoin. But, in some of the work we've done, we believe it's the biggest macro trade over the next 10 to 15 years. And a lot of it has to do with the fact that stablecoins have really become the ChatGPT moment for crypto. And now we have the Genius Act and Project Crypto from the SEC, which is Wall Street essentially running onto the blockchain. But one of the best ways we believe to sort of have exposure is through Ethereum treasuries. And that's a company like BitMine, which I've become chairman recently.
So when we're talking about Ethereum, it's one cryptocurrency. Stablecoins are obviously in the news, especially with the Circle IPO and Circle just reporting its earnings and offering more shares. And then you mentioned this Bitcoin as well. Why are you so bullish on Ethereum? What are the opportunities you're seeing in Ethereum in particular?
Well, Ethereum is the second largest blockchain, and it's different than Bitcoin because with Bitcoin you can't really do programmable contracts, so smart contracts. Wall Street needs to find a stable and legally compliant blockchain to work on. The majority of stablecoin creations are taking place on Ethereum, and when you look at where JP Morgan is building a lot of its layer 2s or Coinbase or Robinhood, they're choosing to do it on Ethereum. So it is the place where Wall Street is essentially financializing the system.
All right. So, by the way, you're not the only bullish person or bullish company when it comes to Ethereum. We're just looking right now. Standard Chartered raising its year-end target for Ethereum to 7,500 from 4,000. Right now, Ethereum's trading right around, I believe, 4,700. Are you this bullish, 7,500 by year-end?
I think that's within the realm of expectations. Ethereum, I think first needs to clear its prior highs of around 4,800. It's within 6% of that now. Believe it or not, Bitcoin's obviously been making many new all-time highs this year, but Ethereum is still below its 2022 highs, 2021, 2022. So I think once it clears that level, I think Ethereum and small caps tend to be correlated. So to me, 7,500 actually might even be on the low end of what's possible.
Really?
I think I've seen many targets of 10 to 15,000.
All right, one more time before we get out of here. You're known for your granny shots. Can you give us one of your granny shots right now with the fact that we have the markets trading at all-time highs, the S&P and the NASDAQ, again, closing at record highs yesterday?
Yeah, I think really one of the granniest of our granny shots is NVIDIA. It's still one of the most important companies. Well, it's probably the most important company in the world. And in terms of forward multiple at 30 times, it's actually still reasonably priced. I believe its PE multiple is still ranks number 38. There are 37 stocks in the S&P 500 with a higher PE than NVIDIA.
While bullish on Bitcoin, Lee's most profound insight is reserved for what he calls the biggest macro trade of the next decade, Ethereum. He posits that Ethereum is having its 2017 Bitcoin moment right now. The catalyst is the explosion of stablecoins and the tokenization of real-world assets, which he calls the ChatGPT moment for crypto, the first killer app achieving mass adoption. As Wall Street rushes to financialize its systems on-chain, it requires smart contract functionality, legal compliance, and unwavering reliability. With its record of zero downtime, Ethereum has become the undisputed choice for institutions like JP Morgan, Coinbase, and Robinhood. Bitcoin paved the way, but Ethereum is now the foundational layer where the future of finance is actively being built.
I think the day the US says they want to acquire 1 million Bitcoin, I think Bitcoin's price is going to go up parabolically.
Right.
Because how is the US going to buy it? I mean, they can't. If you know their wallet, you're going to see every buy, and it's going to become a national pastime for everybody because they're a long buyer. I think it's going to be easier for them to buy large holders of Bitcoin. Maybe even give tax amnesty, right? That's why they're saying it's tax-free. We won't tax capital gains. They'll do everything they can to try to acquire Bitcoin. Mm-hmm. Maybe, but MicroStrategy has a sovereign put. They have 600,000 Bitcoin. That's the easiest way to get to 1 million Bitcoin. I think Bitcoin should be, over 1 million over time. And then I kind of prescribing to the view that there's probably a chance that maybe the 4-year cycle is ending for Bitcoin because of the way institutional adoption of that thesis is taking place. And so you have institutional and essentially permanent holders of Bitcoin coming in. So should be good. So I think Bitcoin should really build upon this 120 before the end of the year. So, 200,000, maybe 250. Every generation, like we're talking about generation alpha now. They're native. They're born native, and they're also going to be born in a world of AI. And so this idea of physical money and only physical things represent value is not going to exist. So I think that's why Bitcoin's future, the best years are still ahead for crypto. Bitcoin, obviously, and Ethereum. Not everyone will agree on Ethereum, but because we have another generation of people and decision makers that are really growing up as in a world of where AI is prevalent in their lives, and then really a token economy. So I think the best years are still ahead. Bitcoin to me is a proven blockchain that, in my mind, is storing value. And it is, as like Michael Saylor says, it's immaculate. And I do think the simplest way to think of it is it's replacing gold. So at least let's get to 1 million, and then we can see how much further Bitcoin goes. But the world is also grappling with the digitalization of everything that we do. And so we're storing information, and we're tokenizing businesses, and we're tokenizing the dollar. And stablecoins have become so important, in fact, from a policy perspective, because stablecoins are now actually big buyers of treasuries collectively. I mean, that's why you may say you don't have to worry about deficits because stablecoins will buy the debt. Well, that is the ChatGPT moment for crypto, because what's happened is that the first killer app for crypto has emerged that is now seeing widespread adoption, which is stablecoins. And now Wall Street is running to tokenize and maybe even financialize their entire system on the blockchain. But that means they require smart contracts. So they're not fighting with Bitcoin. Bitcoin paved the way for Wall Street to recognize that you don't have to have tangible assets to create value. But if you're going to tokenize what Wall Street does, and you tokenize stocks and real estate, you need smart contracts. And the biggest and most secure blockchain with no downtime is Ethereum. And it's legally compliant, and the majority of stablecoins and real-world assets that have been tokenized are taking place on Ethereum. So to me, that is the macro moment. So in 2017, when I first wrote about Bitcoin, I saw this as the time when Wall Street would eventually come to recognize Bitcoin's importance. So Bitcoin, of course, had already accomplished a lot because it reached 100 billion in network value. And that's why I wrote about it. It's like, you know, if you don't believe in something that gets to 100 billion, like, you got to pay attention to. And our thesis was that Wall Street would start to view this as just digital gold. Well, I think Ethereum is having its 2017 moment now, because now is the time that Wall Street will take tokenization seriously, and it's taking place on Ethereum. So I do think it is the biggest macro trade for the next decade.
Ultimately, Lee's analysis elevates Bitcoin from a simple asset class to a premier macroeconomic forecasting tool. His bold call for the S&P 500 to surge to new highs this very month is not a guess. It is a direct conclusion drawn from a clear historical pattern. He states definitively that for the last 5 years, Bitcoin has led the S&P by approximately 1 month. Therefore, Bitcoin's breakaway move on July 9th is, in his view, the most important forward-looking data point in the market today. This transforms his entire outlook from mere speculation into a data-driven thesis where crypto is not just a participant, but the bellwether for global risk appetite. For serious investors, the key takeaway is that the leader of the digital asset world is now providing the critical signals for the traditional one.